Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Conflicting tone. President Trump hits out at China, saying without tariffs, the U.S. would be exposed as a nothing, while his Treasury Secretary, Scott Bessent, floats the possibility of a pause on levies in return for a deal on rare earths. Nvidia, Microsoft, BlackRock, XAI, and Abu Dhabi's MGX join a consortium of investors to buy aligned data centers for $40 billion in the biggest data center deal to date. And mega merger, Abu Dhabi's 2PointZero Multiply Group and Ghitha Holdings set to combine into an investment powerhouse. 2PointZero CEO Mariam AlMheiri joins me to discuss the deal. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, if you had seen the market price action on Friday, you would be shocked to hear that all of the S&P, NASDAQ, and even the Russell 2000 have now made, once again, record highs. So completely brushed off some of those concerns around China, U.S., the Treasury Secretary, Scott Bessent, floating an extension to that truce if China delayed the export controls on rare earths. So perhaps some thawing signs coming through on China-U.S. But here's the picture for today. S&P leading slightly towards the red. European markets pulling back, even though we had a really strong day yesterday, particularly led by France. The CAC 40 index was up 2%, positive political developments there, and LVMH up 12% yesterday in trading. So it was a strong day for luxury. USD slipping this morning, down 0.1%. We are down about 1% over the course of the last 5 days. So dollar weakness theme has returned. And then Brent slightly higher, though still a long way away from the $70 mark we were at a couple of weeks ago, up 0.9%. And President Trump saying that he and Indian President Modi had reached an agreement on potentially curbing purchases of Russian oil. So that's something to bear in mind. Prime Minister Modi, I should say, not President. But that's one of the drivers for the energy market this morning. You can see slightly firmer. And then switching over, just to recap, we have had mega bank earnings the last couple of days. We have heard from Morgan Stanley yesterday, very strong earnings coming through there. And basically, you've had all of the big banks surprise to the upside with very, very strong trading quarter, also on advisory deal making, though some caution coming through on perhaps bubble signs in the AI space. There's a read on that on the terminal this morning. Okay, let's cross over to Insight anchor Anita Anand in Singapore with our next guest. And what a guest it is, Haz.
Well, it is the Canadian Foreign Affairs Minister, Anita Anand, who's on a three-nation visit here in Singapore, in Asia. She was in India and headed towards China next. Minister, good to have you with us. You're coming at a time when we're seeing tit-for-tat trade war in the U.S. and China. How are you navigating relations between the two sides? These are the two largest trading partners for Canada.
It's such a good point. Canada is a Pacific nation ourselves. We have an Indo-Pacific strategy. We're doubling down on the Indo-Pacific, making sure that we're diversifying supply chains, building trading relationships across the region. Indeed, we're looking forward to an FTA with the ASEAN in 2026. So India, Singapore, China are all important in terms of our diversification strategy, and certainly my meeting today with Vivian Balakrishnan, the Foreign Minister of Singapore, was instrumental in our work here in the Asia Pacific.
Of course, your visit to this part of the world comes against the backdrop of China imposing fresh curbs on rare earths. We have, Scott Bessent calling on the G7 nations to come together for a coordinated response. Are you looking for a coordinated response with the U.S.?
We have a free trade agreement with the United States that we're very much looking forward to reviewing in 2026. And in terms of multilateral trading relationships, we're the only G7 country that has a free trade agreement with every other G7 country. And as I said, the Indo-Pacific is extremely important. I'm just coming off a trip to India where we finalized a joint statement for cooperation on public security matters, but also on energy, on critical minerals, on resilient trade routes, on agriculture and agri-foods.
But rare earths are an important issue for the world.
Yes.
Is Canada looking for a coordinated response with the U.S.? And how might a response look like?
Well, Canada's actually looking out for our sovereign interests and our economic interests. Our diplomacy is very much about ensuring that our economic picture benefits from our diplomacy. And so, yes, we're talking about critical minerals internationally. We're talking about energy internationally. We're talking about Canada's depth and wealth in natural resources.
So looking to be part of the response with the U.S.,
Canada is right now the host of the G7. So across our government, various ministers are in touch with the G7 counterparts for sure. But I will say that we are also very much focused on our domestic economic interests and how we can further those interests by diversifying supply chains. This is why I'm in the Indo-Pacific right now.
So what does that mean in terms of relations with China? How do you put Canadians first in your relations with China?
Well, we actually do a significant amount of trade with China. After the United States, China is one of our largest trading partners, although with the United States it's at about 80%, so the relative number is smaller. But I will say that we need to open the ability to have a dialogue with China so that when there are issues of concern in the relationship, we can come to the table and raise them. I will say that we challenge China where we must, and we cooperate with China where we can. That has been the strategy with China, and it will continue to be.
And what's the biggest challenge when it comes to your relations with China? What's key?
It's a good question because the relationship is so complex. The key is to open the strategic dialogue. In addition, we need to allow trading to continue. We need to raise some issues relating to human rights and the South China Seas. But all in all, we need to be able to have that dialogue.
Canadians are key for Canada to mend its ties with China, and some have suggested, especially those in West Canada, that perhaps you need to lift the tariffs on Chinese EVs. What are your thoughts on that? Is that on the table for Canada?
As I said, as Foreign Minister, my role is to lay the foundation for the dialogue across a number of sectors with all countries, including China. That's why I was in India. That was part of my discussion with Vivian Balakrishnan this morning, and that is the message I'll be taking to China tomorrow. Again, Canada has depth in so many sectors: critical minerals, natural resources, energy, artificial intelligence. We cooperate with China where we can, say in the area of climate change. We also need to raise issues of strategic importance to the Canadian economy, and that will be on the table tomorrow.
Realistically, though, I mean, how much can be achieved in your visit? How much can you mend relations, given outstanding issues between the two sides?
I would say that with China, we have had many positive conversations. I just spoke with Minister Wang Yi in Kuala Lumpur in July, for example, and we had a constructive bilateral dialogue, and we will continue to have that constructive professional conversations as we must in the interests of our two countries and the global economy.
Minister, we know that Canada wants to export more LNG and oil to China and some of the other Asian nations. Where are you with that? Have you had any sense of commitment from any of the nations here?
Again, a great question, given Canada's competitive advantage in LNG. We have demand from all over the world for our LNG. We've had a shipment leave the west coast of Canada, the coast of British Columbia, and we are continuing to develop our capacity for LNG, seeing significant interest. I have to say,
where from?
Every country I speak with is interested in Canadian LNG and Canadian energy, Canadian critical minerals. We have what the world wants in Canada, and now we are leveraging our competitive advantages. I'm not sure if you've heard, but we have 10 large national projects, including wind, including LNG, including nuclear energy with the development of an SMR at the Darlington nuclear plant. Countries around the world are asking how they can invest in these projects, and we welcome the interest.
Minister, just to be sure that China has indicated that it wants more of the Canadian LNG and oil exports. Is that correct?
I will have to get back to you after my conversation with Minister Wang Yi tomorrow. That is part of the conversation that we will have across the board, across sectors, making sure that we build the ability to have that strategic dialogue with China.
We know that 2 Canadians were detained on the back of the Huawei issue, and one of the Canadians actually said that in terms of China's approach to Canada, it's hostile. That was the word being used. How do you respond to that, and how do you mend relations under such circumstances?
Well, we have to recognize that the global strategic environment has shifted significantly. The global economy has shifted significantly, and this is a time of economic stress. And so the key for Canada is to be able to raise issues of concern at the table, to challenge countries where we must, and including China, and to cooperate where we can. Canada is a multilateral proponent. We believe in multilateralism. At a time when countries move towards protectionism and unilateralism, Canada's at the table. We will not retreat. We will continue to promote multilateral engagement across trade, across defense and security, and across global organizations, as we have seen and done since the end of the Second World War.
As you said, you came from India. You had conversations with Prime Minister Modi.
Yes.
To what extent have relations been mended, given that relations took quite a turn in 2023?
We are taking a step-by-step approach, a very systematic approach with India. At the foundation of that approach is a discussion about public security, ensuring that there is a law enforcement dialogue between the two countries. We also have an RCMP investigation occurring in Canada that is an independent investigation. Over and above that, we want to make sure that the economic relationship proceeds in this step-by-step manner. That's why we finalized that joint statement with India. Unprecedented. We have not signed a joint statement with India in years and years. Now we are together at the table talking about how we can cooperate bilaterally on trade, on our economies, in terms of critical minerals, energy, agriculture, AI, etc.
Were there red lines stipulated by Ottawa? I mean, transnational repression is an issue.
Yes.
Where are you with that with India?
In every conversation, I made sure to emphasize the importance of the rule of law, public security in Canada, and respect for the laws that govern our country, because the protection and the safety of Canadian citizens is above all our priority as a government. In addition, on issues of foreign interference and on issues of transnational repression, of course, those are part of the conversation relating to the law enforcement dialogue and public security writ large.
Minister Anand, always a pleasure to speak with you. Thank you so much for popping by. That was a Canadian Foreign Affairs Minister, Anita Anand, speaking to you live, of course, on your show, Jumana, here from Singapore.
Love it. Love a bit of insight action on horizons. Bloomberg's Haslinda Amin with Canadian Foreign Affairs Minister Anita Anand in Singapore. And speaking of Canada, do not miss Canadian Prime Minister Mark Carney on the debut episode of The Michelle Hussein Show, a new Bloomberg vodcast launching this Friday. Now for a look at some of the other stories we're following. Israel has threatened to resume attacks on Gaza if Hamas does not go through with all the steps outlined in President Trump's peace plan. Israel's military has been ordered to prepare if the militant group does not disarm and return all the bodies of dead hostages. Hamas has so far released the remains of 7 hostages, leaving 21 unaccounted for. The U.S. says it's not a point where it feels the truce between Hamas and Israel has yet been violated. Bloomberg sources say Turkish officials are considering appointing new policymakers to the central bank's rate-setting committee before the retirement next year of Deputy Central Bank Governor Cevdet Akçay. His term expires in April, and an extension is seen as unlikely. The economist is well liked by investors and is seen as one of the main backers of the orthodox policies adopted by the central bank since 2023. And coming up, global trade tensions take center stage as the U.S. and China weigh their next move. Maroun Kairouz of the World Economic Forum joins us next to talk about the road ahead for the global economy. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersechi in Dubai. President Trump says the U.S. is locked in a trade war with China, and without tariffs, the country would be exposed as nothing.
Are we in for a sustained trade war with China?
Well, you're in one now. Look, we have 100% tariff. If we didn't have tariffs, we would be exposed as being a nothing. We would have no defense.
Well, Trump spoke after Treasury Secretary Scott Bessent. He dangled the possibility of extending a pause on high U.S. levies targeting China for longer than 3 months to resolve a conflict over critical minerals.
Right now, we are currently in a 90-day roll on the tariffs. So is it possible that we could go to a longer roll in return for a delay? Perhaps. But all that's going to be negotiated in the coming weeks.
Treasury Secretary Scott Bessent also indicated the U.S. would seek wider support beyond the G7 to address China's actions with targeted measures. Economists have described the latest moves by both sides as attempts to stack up bargaining chips ahead of a likely leaders' meeting later this month in South Korea. For more, we're now joined by Maroun Kairouz, Managing Director of the World Economic Forum. And, of course, the special World Economic Forum Dubai session is taking place the last couple of days, yesterday and today. Into that, I mean, I've got to think that the future of globalization is one of the topics that's going to be discussed. I mean, we just heard from President Trump now. He's saying that the U.S. actually is in a trade war with China. Lots of saber rattling there, uncertainty about the path ahead. Equally, my colleague Haslinda just interviewed the Canadian foreign minister who's saying that multilateralism isn't dead. So what wins out? Is globalization dead? Is fragmentation the new world order?
Jumana, thank you for having me first. Looking at the broader picture beyond the headlines, there's no doubt that we're in an era where sovereignty-first politics and inward-looking policies are back into force. We cannot deny the many benefits that globalization has had over the past few years, including lifting many people across the developing world out of poverty. But there has been winners and losers. And so beyond any one administration, a lot of these inward-looking policies are responding to real frustrations in many countries about how the winnings from globalization have been distributed. And so whether it's the Biden administration, whether it's the Trump administration, the terms of trade are in general being reviewed. What matters is that even when you are in a nationalistic or nation-first world, dialogue is still needed and common interests can still be found. And that's why the World Economic Forum is here in Dubai, to try to see what are these areas of common interest, including, for example, fighting the next pandemic, cybercrime. Everyone has an interest in addressing those issues. How can we find a way to collaborate, even when when the big countries are in a more competitive and competing?
So it's interesting that you mentioned the pandemic as one example, of course. But what other remedies are there? What scope is there for more overlap in an environment where countries are looking more inward, as you say?
So the World Economic Forum released its global barometer on the state of collaboration earlier this year. One area I mentioned is pandemics, where you see a willingness to collaborate. Cybercrime is another, for example. And there is still, despite all the noise, there is still an interest to collaborate on science and technology. I don't think anyone has an interest in seeing, for example, artificial intelligence go to the worst possible outcomes that we could have. Everyone has an interest in keeping it under control, keeping it in, let's say, safe hands. And so these are some areas where
everybody has a vested interest.
Everyone has a vested interest, and dialogue channels need to be maintained open so that we don't get to the worst outcome and everyone loses in that case.
And speaking of this new world that we're living in, I thought it was interesting that in Dubai, one of the focus themes has been cybersecurity. So just talk us through how big of a risk you think cybersecurity threats are, and how companies, sovereigns, industry leaders should be thinking about cybersecurity risks?
So the first thing to note is that as we are being more and more digital, with artificial intelligence, with cryptocurrencies, and so on, the risk and cost of cyber threats continues to increase. We're talking about 4 to 5 trillion US dollars a year in losses because of cybercrime, at a time where budgets are constrained and we need to be investing that money in the future in new technologies and not losing it to cyber threats. And so that is an issue that threatens every government, every company. And there's a vested interest for everyone to collaborate to address cybercrime. China has an interest, for example, in and has made it clear it wants to respond and address the scamming centers in some of the countries around its border. All the Western companies, governments have also been very clear on this position. And so this is one area where the forum feels it's productive, beneficial to bring together people from across disciplines, across sectors, across countries to facilitate collaboration on this issue.
Yeah. I want to talk specifically about the Middle East region as well. Interestingly, yesterday the IMF did a preview of their forecast for the region. They actually upgraded the region as a whole, specifically led by GCC nations. But when you think about the region, it's a multi-speed region. You have the GCC economies, which seem to be doing okay, powering ahead. There's decent growth. And then you've got countries emerging from conflict. What is the work that the World Economic Forum can do within the region to facilitate and help the development of some of those countries in the latter basket that I referenced?
So in the latter basket, it's important to also remind ourselves that our economists are also bullish about the region at the World Economic Forum. But we did have a big scare a few months ago.
Yeah.
And the meeting in Sharm el-Sheikh earlier this week was one positive step on the way to more stability in the region. And so that's the key word here. For those countries that are emerging from conflict, and I was just on visits to Syria and Lebanon, for instance.
I saw that you met with President Shara,
I
President
did.
Aoun.
We did meet, had a very productive meeting, and I can tell you the leadership in both these countries, for instance, is focused on the future, on the economy, and on moving past the instability that we had in the past few years. And that's the key word, stability. We need the international community to engage and to provide the right incentives to keep these governments on track. And so the World Economic Forum, we've invited both leaders to Davos next January. We are planning to facilitate their engagement with the international business community, for example, because we feel that the private sector can play a massive role in providing the right incentives, the right partnerships to stabilize those countries and address the aspirations of the young people that have been frustrated, suffering for at least a decade now. Yeah. And so we are optimistic about the future, but remain willing to engage and to support in any way that is possible.
Yeah. To what extent do you think the process of rebuilding some of these economies is actually contingent on that political stability, because it will incentivize the international community to keep their focus on the region also?
Rebuilding is one thing. Of course, stability will be key. I've heard very clearly from international stakeholders, also from regional stakeholders, including in the GCC, that they've had experiences in the past of investing, rebuilding, for that to be destroyed in a subsequent round.
Yeah.
So those mistakes will not be repeated. And that's why it is incumbent on the authorities of those countries to provide the necessary reassurances to make the brave needed steps of reform, both political and economic, to provide that reassurance. So far, all of the things being said are the right ones. What we need to do and to work together to achieve is to accelerate the pace of reform.
Maroun, very nice to have you on. Thank you so much. And I'll see you in about an hour's time. I'm heading down to the World Economic Forum myself. Maroun Kairouz, Managing Director at World Economic Forum over here. Now, coming up, we'll be speaking to Mariam AlMheiri, the Group CEO of 2PointZero, as the Abu Dhabi investment company agrees to be merged. That conversation next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Conflicting tone. President Trump hits out at China, saying without tariffs, the U.S. would be exposed as a nothing, while his Treasury Secretary, Scott Bessent, floats the possibility of a pause on levies in return for a deal on rare earths. Nvidia, Microsoft, BlackRock, XAI, and Abu Dhabi's MGX join a consortium of investors to buy aligned data centers for $40 billion in the biggest data center deal to date. And mega merger. Abu Dhabi's 2PointZero Multiply Group and Ghitha Holdings set to combine into an investment powerhouse. 2PointZero CEO Mariam AlMheiri joins me to discuss the deal. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jemana Versace in Dubai. Record highs once again for Wall Street. And I started the show saying this, but on Friday, if you looked at the price action, you wouldn't believe that maybe a couple of days later, all of that would be forgotten. Once again, investors perhaps focusing on the earnings season, the strong results coming through from the banking sector, and less on some of the U.S.-China trade war developments and the saber rattling coming through from President Trump. The latest, though, is that the Treasury Secretary is suggesting that they could extend that truce. So let's see what happens there. S&P today trading sideways. European markets dipping a little bit, down 0.4%. We had a strong day for the French index, the CAC 40 yesterday in focus after positive political developments over there. Le Cornu getting the support of the Socialist Party. And we had strong luxury results. So LVMH was a surprisingly strong performer yesterday, up 12% in European markets. The USD slipping this morning, down 0.1%. We are down more than 1% over the course of the week. So once again, we've resumed that downward trend of the U.S. and a grand realignment of portfolio allocation, as we've been talking about, with some of that money, a lot of that money moving into gold, which, by the way, not shown here, is trading above $4,200 per ounce now. And then finally, Brent also in focus, up 0.9%, sitting around $62.50. Some comments coming through from President Trump overnight saying that he had reached an agreement with Indian Prime Minister Narendra Modi on curbing their purchases of Russian oil. But we don't have more details than that. That's the reaction in the energy market. And let's flip over quickly, taking a look at that banking index, KBW, just to show you that, yes, we did have that dip around April, which is when old stocks tanked, basically. But since then, we've come back a long way. And the results the last few days have been really, really strong from all of the banks that were reporting. So this is where that KBW Bank Index is, up 17% year to date. Now, in local news, Abu Dhabi's Multiply Group, 2PointZero and Ghitha Holding are set to merge through a share swap deal. The merged entity will be renamed 2PointZero Group and have assets of about $33 billion. All three firms have links to international holdings, the $239 billion conglomerate chaired by the brother of the UAE's ruler. I'm really happy to say that joining me right now is Mariam AlMheiri, Group CEO of 2PointZero. So really big news, this mega merger deal. Just walk us through the new framework and what the new company is going to look like.
Thank you so much, Jemana, for having me. Thank you so much to the viewers here today. It's really an exciting moment for us here. And it's when you think of this as a milestone moment of 2PointZero's growth journey, where we really see how over the past few months, because 2025 was really our target year to go IPO. And with that, we had the target of reaching 100 billion dirhams in total asset value. And so the last few months was really all about making sure our scale and growth and asset base was moving, as well as looking at streamlining our structure to focus on two power engines, and that is energy and consumer. Now, why energy and consumer? When you look at global energy demand, we're going to see a rise of 20% of energy. I mean, look at the data centers that will be coming online. You're upgrading the grids. And then you're looking at consumers, where it's projected that 1 billion new consumers will be coming into the middle class by 2030. And that's an additional of $2.4 trillion in annual consumption. So when you see these mega trends that are really shaping the next decade, when we then got the opportunity of doing this merge, looking at Multiply and Ghitha and their assets, it kind of seamlessly fit into those verticals and really, as you said, creating a powerhouse and a next-generation investment platform and one of the largest listed companies on the Abu Dhabi Stock Exchange.
So actually, let me just pick up on that particular point. You mentioned that this was going to be the year that you IPO. Multiply Group obviously had already IPO'd. So listing obviously off the question because essentially it's all part of the listed portfolio now. Okay.
Yes.
So that's off the question.
That's off the question. It was an option that we were, of course, looking at, but when we got this this transaction or this opportunity, it really looked like a lucrative opportunity because, again, you are combining strengths and synergies of all these great assets.
So let's talk about the synergies of those great assets, because you could argue that they're kind of separate verticals. You've got, your energy vertical, your consumer vertical, your food vertical, your mining vertical. Are there synergies to be had?
Yes, of course, of course. I mean, this is something we learned from the IHC mindset, so creating these dynamic value networks. So when you look at our energy platform, this is very much powered by 2PointZero. And 2PointZero has basically taken the assets of the mining, so we've got IRH, that's upstream, all the way to producing electrical components. You're talking about cables, transformers. These are all necessary components you need for the power facilities, for data centers, going down to producing energy. So we've got solar, wind, battery storage system, and then, of course, the energy trading as well. Then you go on the consumer side. That's where we have the financial services, and now bringing in Multiply and Ghitha very much on key consumer areas when you talk about beauty, media, packaging, food, and this is why this fits in so nicely.
And are your own responsibilities going to change?
So going through this transaction, Jomana, we will be going into a new governance as well. So we're waiting for the final approvals from regulatories and also the shareholder approvals. But very soon, the new governance and framework will be announced.
We can talk about that then. Let me just go back to what you were saying about 2.0's, I guess, bread and butter, right? This is what you've been doing up until this moment, investing in renewable energy alongside some of the upstream sectors like minerals, like metals. What do you see as the company's role? And now, obviously, the company has become a lot bigger in advancing some of the UAE's strategic ambitions in that space.
Absolutely.
Is that an arm for that?
Absolutely. I mean, thinking of where we started, being an AI enabler, an energy transition accelerator, and now really bringing in the consumer angle, we're still, of course, the energy and AI enabler side is still extremely strong, and that's reflected in the energy vertical. And with that, of course, we have IRH. I mean, we've got mine operations now in Zambia. We've got the Mopani copper mine. We've got a tin mine as well up and running. Everything we can see in the era of AI, we will need these minerals and metals to be able to power the data centers and get to where we want to on the energy transition.
Yeah. On the energy transition, the topic has become so politicized now. And for every dollar that's invested, that is a dollar that's also criticized. Is that holding back, do you think, investment in this space because of potential political backlash?
You see, for us, whenever we look at this, we're looking at this from a commercial point of view, of course. But, I mean, we've learned in the UAE that any challenges, we turn it into opportunities. And so taking that in mind, we are, of course, watching the markets carefully. There's a lot going on. We think of any investments we do with strategic long-term sights as well, because anything you do in the mining space, in the energy space, has to have a long-term view. Yeah. So we take these very, very carefully as we watch the market and look carefully where we're going to be investing.
One of the big topics we've been talking about the last couple of days is China's plans to restrict potentially rare earths exports. And obviously that could cause major mayhem around the world because so many supply chains are reliant on those rare earths. I guess the question I want to ask you is, how important is it for strategic sovereignty is it to have access to these critical rare earth materials, to those minerals that you were just talking about?
We're watching this very carefully, and as I said, for us, what's important is that we look at the long-term horizon on any of the acquisitions and investments that we do.
Yeah.
I mean, the world is going through a very exponential change as we head into the AI era. Demands are big on energy and minerals, so we need to work fast, we need to be agile. But of course, the UAE really being the capital of capitals and a magnet for investors has really helped us look at partnership and acquisitions in a horizon that's long-term.
Yeah.
And
final question for you. How do you think artificial intelligence and the application of AI across this huge mega group now is going to revolutionize your business operations?
So many people kind of think, okay, when you're now bringing in these 3 flagship portfolio companies, and we say our operating system is AI, and you're going to see the exponential growth of AI agents working in this company. So that's something we're really looking forward to and working very hard. Of course, under the leadership AIHC's mindset of really bringing in AI into the operating system is something we've been working on in the past few months.
Well, it leads us nicely to our next segment. We're going to be talking about data centers. Really pleasure to talk to you today, and congratulations on the news. Mariam AlMheiri, a Group CEO of 2PointZero. And coming up, we'll be speaking to Ben Wade, the head of Macquarie Asset Management, as it sells a data center firm to a BlackRock-led group for $40 billion. I believe that is the largest data center deal to date. We'll have more details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. JP Morgan is the latest Wall Street bank to secure a license to open regional headquarters in Saudi Arabia. Sources tell Bloomberg operations in the Middle East and North Africa will continue to report into the bank's hub in London. JPM already has deep ties with Riyadh, last month underwriting a $20 billion debt facility to help investors, including the PIF, in its $55 billion electronic arts deal. Saudi Arabia plans to build a massive new development next to the Grand Mosque in Mecca. The move is part of the kingdom's plan to modernize the holy city and accommodate millions more pilgrims each year. The King Salman Gate project is set to add praying areas, residential units, hotels and shops, with the development generating more than 300,000 jobs by 2036. Bloomberg's learned that Anthropic has held early funding talks with Abu Dhabi investment firm MGX. Sources say CEO Dario Amore met with MGX during a visit this month to several Middle Eastern nations. In September, the OpenAI rival raised $13 billion in a funding round that nearly tripled its valuation to $183 billion. And Macquarie Asset Management has agreed to sell aligned data centers to a group led by BlackRock's global infrastructure partners for $40 billion. The acquisition includes an investment from Mubadala's AI company MGX and is the biggest data center deal in the world to date, and also the largest private equity deal. So joining us now is to talk about the transaction is Ben Wade, head of Macquarie Asset Management. Well, huge deal in private equity in data centers. Congratulations on getting across the line. First of all, talk us through why you thought this was the right time to exit.
Sure. Well, we've owned the business for 7 years. Our job is to create assets and to generate alpha for our clients.
Yeah.
And so while we think there's a long way to go in the digitalization and AI thematic, we thought now was the time to realize that alpha and return it to our clients, just given the demand for these sorts of assets around the world.
Okay. When is the transaction expected to close?
It'll close sometime in 2026. But, we've been an owner of this business for 7 years.
Yeah.
And so this is the right time for us. We are still deeply committed to this thematic. So we recently announced another investment in the US with Applied Data Centers.
I was going to say, right, because the obvious question from here is, are you selling because you think we've reached peak data center? That doesn't appear to be the case from what you're saying.
We've got 5 other platforms around the world. We've just committed to a $5 billion partnership with Applied in the US. I think the important thing to remember is, our job is not to just accumulate assets. Our job is to manage other people's capital and return it to them at the right time. And so we don't own portfolio companies in perpetuity. And so like with our air transaction last year, which was then the largest data centre transaction, obviously now surpassed by a line, our job is to constantly look across our portfolio of 185 companies and make decisions on when it's the right time to exit. And we just felt this is the right time now for Aligned.
Maybe just a thematic question. Are enough data centers being built around the world to satisfy demand?
That is a very difficult question to answer. I think what we do know is there is rapacious demand for data centres. There's an enormous amount of investment going into those data centres, but it will take time to build the capacity. And so I think we do know that for people that have differentiated expertise, powered land and great relationships, particularly with the hyperscale clients, there is still a large way to go in terms of meeting that demand, and that's exciting for investors.
Yeah. I know you've been involved in the private side, private equity, private credit. Yesterday, JP Morgan CEO Jamie Dimon made some remarks that got a lot of headlines. He said, he was referring obviously to the bank's losses from Tricolor, but he said there may be other cockroaches. Just to mean, when you're getting involved in this space, you have to assume that other lenders are going to have equal underwriting standards, but not all lenders have the same underwriting standards. Could there be credit issues lurking underneath the surface that we need to be mindful of?
I think the obvious answer to that is there could be. There could be. I do think that actually private credit has a very long track record of delivering good returns and actually having very good underwrite standards. And as we've seen the debanking of the world, we've seen the need for the rise of private credit to really step into the shoes of the traditional banks. I think, again, there may be some idiosyncratic issues out in the marketplace, but generally I think private credit operators and players and investors have very high standards and have generally done a very good job over the last 10 years when you look at their loss rates. And so I think we can have real confidence in that sector.
Is that a sweeter spot to be right now than private equity, private credit, given the much juicier returns that you're getting there?
I think
it's difficult to realise returns in private equity these days.
I think the two sweet spots are infrastructure. That's having its time in the sun, just given the importance it is as an enabler for economic growth and economic enablement, but also things like the digital economy. And I think, secondly, there have been a lot of opportunities in private credit, particularly with the increase in interest rates, but also the debanking going on. That said, a lot of capital was raised for private credit, and there haven't been as many opportunities to date as we would have liked for that wall or pool of capital. So I think private credit has a long way to run. It's still a very small part of the traditional banking industry globally, but it won't be a linear experience.
Yeah, let me ask you, Australian bank, international operations, commodities exposed, you're right in the middle of it because there is this ongoing trade war going on between US and China. How does that influence the way you want to invest, as you say, over the medium term, long term, with the lack of clarity over what's going to happen over the next 2 months?
Yeah, well, we just look at great trends, whether it's demographics, whether it's deglobalization, whether it's digitization. When we invest on business cases through the cycle. They just don't depend on one run-up in markets, one particular increase in any particular price. And ultimately what we do is we're trying to create assets where we're building cash flows. And I think what we've found as investors is that you can create alpha doing that way. We don't go out and buy $40 billion businesses, we create $40 billion businesses. That's really the approach we take. So again, I think it's knowing what you're good at, knowing what the big thematics are, and making sure that when you invest, you're investing for the medium term, but with business cases that stand the test of time and are resilient across cycles. And that's what we've been doing in infrastructure for 35 years.
Ben, really good to chat to you. Thank you so much for coming on our show. Ben Way, head of Macquarie Asset Management. And coming up, Senegal's dollar bonds surge as talks get underway with the IMF on a new program. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. Senegal's dollar bonds surged the most since July as talks began with the International Monetary Fund, the IMF, on a new program. The discussions come after a year-long review of Senegal's finances following the suspension of a major IMF loan over undisclosed debt. For more, we're now joined by Ondiro Ganga. Ondiro, so I guess it's safe to say that Senegal has begun working their way out of the woodworks right now.
Jumana, working their way out of the woodwork is a big statement, but what we know for sure is that they're beginning to show signs of recovery. If we look at the Eurobond maturing in 2031, it jumped 2.9 cents to the dollar. And this just goes to show that investors, or rather the market, is beginning to price in this new stability, but it's very conditional. One of the things that has helped boost this confidence is the meeting that the Senegal delegation had with the IMF's managing director in Washington. And Bloomberg has reported that an IMF staff meeting will be in Senegal next week to try and finalize the program. They could go for the same amount that they had last time, 1.8 billion, or they could be a little bit more ambitious, but getting back IMF on board will be very key. If we go back to a year ago, the IMF had to pause their program because after an audit ordered by President Bassirou Diomaye Faye, it came to light that there was $7 billion of undisclosed debt. As a result, we saw budget deficit widened to about 14%, debt to GDP way over the roof, 190%. And because IMF paused their program, Senegal was locked out of the international market. They've had to look at regional markets to finance themselves. But this is expensive borrowing. They've raised about $5.3 billion, but that has come with 2 downgrades. So are they trying to work their way out of the woodwork? Yes. But is the road ahead quite long and bumpy? Yes.
And Ondiro, what will it take to restore investor confidence and get the economy to bounce back at this point?
Jumana, fiscal transparency and discipline must be guaranteed. They found themselves here because they were not open in the beginning. So there are a couple of things that they will need to do. That budget deficit has to come down to single digit. The government is targeting about 7%. Debt to GDP has to also come down. They've gotten it to 119%. It needs to come below 100%. And that insatiable appetite for borrowing, it has to also be tempered. The government is spending a lot of money, and this is one of the reasons why we saw them being downgraded. Granted, they make big promises, particularly during the election cycle, and now they're in office and people are looking at them. Electricity, employment, investing in industries, but then again, they have to do this within the confines of debt sustainability. So now, as they're beginning to talk with the IMF and finalize, investors will be looking out on how well will they raise revenue, and are they able to implement the conditionalities from IMF, like removal of subsidy. And these are some of the things that will dictate how they move forward with their relations with investors moving forward.
Bloomberg's Ondiro Ganga in Kigali, Rwanda. Thank you so much for the overview. Some important IMF discussions taking place this week. A quick look at equity futures. We are building on from record highs for all of the indices, all of the U.S. majors yesterday. S&P, NASDAQ, and the Russell 2000 ending up in record territory. Today, European markets dipping a little bit, down 0.4% after very strong performance yesterday, mostly led by France, as we've been talking about the last couple of sessions. Also, luxury putting in a good performance yesterday. And keep an eye out on further earnings coming out in Europe today, too. Some of the big ones hitting ABB, Pernod Ricard, amongst others. So right in the middle of earnings season. And that is it for Horizons Middle East and Africa. I'm Jumana Bercetchi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.